Good day, grade 12 learners, and welcome to today's accounting lesson. My name is Mr. Simbi, and this lesson is brought to you by the Gauteng Department of Education in collaboration with Sci-Bono, and is being broadcasted here at Pakama Research Center. I am today going to be talking on VAT, value added tax. Now, my objectives today are very simple. In today's lesson, I expect to explain the three VAT supplies. I intend on explaining the three VAT supplies. I will also be touching on calculations for VAT, that is using exclusive and inclusive VAT amounts. In today's lesson, I will also be distinguishing between VAT input and VAT output entries. I'll also be able to determine the amount payable or receivable by the South African Revenue Services, that is SARS. In today's lesson, I intend on completing the VAT control account. So I'll also be doing the VAT control account. It is important that whenever we talk about value-added tax, we also incorporate and integrate internal control procedures that relate to VAT. Now, the first question that comes to your mind then is, what is VAT? What is value-added tax? Now, value-added tax is an indirect tax. It is important that we indicate that this is an indirect tax that is charged by a vendor, that is a VAT vendor, on the supply of goods and services. So what we have to take from this definition, which is important, is that it is an indirect tax and which is charged by a vendor, that is on the supply of goods as well as services. Very important. Now, it is very important to know that if you are to become a VAT vendor, you have to be registered. All right? A VAT vendor is registered for VAT and is obliged to collect VAT from their customers or clients on behalf of SARS. In other words, when VAT is collected by the VAT vendor, it does not belong to the VAT vendor. So the VAT vendor cannot pay his or her own personal business expenses using the VAT, because the VAT belongs to SARS. So when the VAT vendor is collecting the VAT, they are collecting it on behalf of SARS. It does not belong to the VAT vendor. It is also important to know that registered VAT vendors can claim, all right? Very important aspect here, that they can claim VAT on supplies or expenses that are needed to generate income for the business. I'm going to show you today as we do calculations in this lesson. Now, it is very important to know about VAT registration, and I am going to talk about how a vendor can register. A registered VAT vendor is a business enterprise that is registered for VAT. So you have to register for VAT, and it is obvious you have to register by SARS. Now, it is also very important to know of the types of registrations that are given, the options. Number one, there's what we call compulsory registration. Already you know, if something is compulsory, it means you are enforced to do so. All right? So any business whose annual income exceeds, very important, when your annual income exceeds 1 million rands, you are then compelled to register as a VAT vendor. When your annual income exceeds 1 million, you are compelled to register as a VAT vendor. There is also the second type of registration, which we call the voluntary registration. You can hear from the word voluntary registration. Now, this applies to any business whose annual income is less than 1 million. All right. So if you are less than 1 million, but you are having annual income in excess of 50,000, you are having income less than 1 million, but above 50,000, you can register as a VAT vendor, but on voluntary registration. So I've spoken about the two types of registration. Number one, compulsory. If your income is in excess of 1 million, then you are compelled. But then there is voluntary registration if your income is less than 1 million, but above 50,000. Now, it is very important that we talk about the VAT supplies. VAT supplies. And there are different VAT supplies that we're going to talk about today. The first type of supply is what we call the zero rated supply. All right? Zero rated supply. The second type of supply is what we call the standard rated supply. Very important. We're going to spend much of our lesson today on the standard rated supplies. The next one is what we call the exempt supplies. Exempt supplies. Now, with exempt supplies, I'm going to show you the type of goods that are part of exempt supplies. Now, let's start first with our zero rated supplies. What are the zero rated supplies? Our zero rated supplies, these are goods and services on which output VAT is levied at a rate of 0%. So we're talking 0%. All right. So we are levying VAT at the rate of 0%. Okay. Now, what type of goods are these? These are items mainly comprised of basic foodstuffs. All right. Your basic foodstuffs. You're talking your brown bread, your maize products, your rice, your milk, all right, and then your fruit and vegetables. These are zero rated supplies. And then it is important that we also add here petrol and diesel, mainly because they have their own specific type of tax. After the zero rated supplies, we're going to talk now about our exempt supplies. So it means it is exempt supplies. Let's define it. Exempt supplies, these are goods and services that are not charged. So these ones, they are not charged VAT. You can hear here. They are not charged VAT. All right? The standard rate or zero rate is not applicable to this category. In other words, these goods, they do not qualify to be zero rated, neither do they qualify to be standard rated. So they become what we call exempt supplies. All right. Let's see what type of goods and services do they include. So they include financial services, all right, or rental of a private residence, transportation of people within the Republic of South Africa, that is by road or by rail. It will also include educational services that are supplied by the state and childcare services. So these are your exempt supplies. All right. Remember, so far I've spoken about the zero rated supplies, and I've also spoken now about the exempt supplies. I'm going to go now to the third type of supply. The third type of supply is what we call the standard rated supplies. Standard rated supplies. Our standard rated supplies are goods and services that are subject to VAT at the rate of 15%. So in our calculations today, we're going to be focusing on these standard rated supplies, and we're going to be calculating VAT at 15%. Now, these are goods that are not exempt items. Remember, I've just explained exempt items. And these are goods that are also not zero rated items. So they are neither exempt nor zero rated. Therefore, these become our standard rated supplies. Now, I want now to quickly go on to my next slide. Now, I want to talk about the type of payments, because remember, we are collecting VAT so that we can pay it over to SARS. When we as a business are doing business, we are trading as a registered VAT vendor. We are trading and we are collecting VAT from our customers on behalf of SARS. So there has to be methods in which we can account for this VAT over to SARS. So I'm going to talk about the two methods of accounting for this VAT to SARS. We have what we call the invoice and the receipt-based payments. All right, let's start with the invoice-based approach. This implies that VAT is charged to customers. Remember, we are a registered VAT vendor. So when customers buy goods, we have already charged VAT. And we are very much aware that this VAT is due to SARS. All right. The moment an invoice is issued, all right. So we are selling goods to our customers. The moment we write them an invoice, we consider that SARS is being owed by us as a business. In other words, VAT is already due to SARS the moment we issue an invoice, which means that you have to pay the VAT even though you have not yet received the money. Now, I want to take it that you already understand what is an invoice. It simply means you've sold goods on credit. So the moment you sell goods to your customers, you issue an invoice. When we come now to VAT using the invoice-based method, we already consider that we must pay the amount over to SARS, even though we know our customers have not yet paid us. So we have not yet received the money on the sale of goods, yet we already account for VAT to SARS. This is the invoice-based method. The second type of method is what we call the receipt or the payments-based method. The receipt or the payments-based method. Now, VAT is payable to SARS when the money is received. Okay? Money is received. And the business has to register for this option, and there are certain conditions which do apply. So the difference between the two methods, that is the invoice-based method and the receipt-based method, it is with the invoice-based method, we consider that VAT is due to SARS the moment we sell the goods, even though we have not yet received the money. But with the receipt-based method, we consider VAT due to SARS the moment we receive the money. So that is the main difference. With the receipt-based method, we consider that VAT is payable to SARS when we have received the money. All right. Now, the invoice-based method, it is very important that we expound more on this one now. All vendors are required to use the invoice-based method when they are accounting for VAT. All right. Unless they can apply to SARS and they have been specifically authorized to use the payment-based method. So all vendors should use the invoice-based method unless permitted by SARS after they've submitted an application. And remember, certain conditions do apply in this regard. The invoice-based method requires vendors to account for VAT when, okay, very important, when an invoice is received or when invoices are issued. Okay, remember, we are also buying as well as we are selling. Okay, I want us now to come to some of the information that relates to VAT. The first one is what we call the VAT 201 form, the VAT 201 form. This is a form that vendors are required to complete in order to submit the VAT records to SARS. Remember, we have to account to SARS in terms of our dealings, that is, our payments and our receipts in relation to VAT. So the only way we can do that is by filling in a VAT 201 form. Now, it brings us now to what we call SARS e-filing. I think most of you guys have heard about SARS e-filing. Tax season, please complete your VAT form through SARS e-filing. This is a free online process for the submission of returns and declaration and other related services. So when we talk about SARS e-filing, it is a free online process whereby we can submit our returns and declarations over to SARS. Okay. Now, I want us to come now to a moment where we understand, how do we know whether VAT is input and VAT is output? So we want to define input VAT as well as output VAT. Now, input VAT, this is VAT that is charged or paid by a vendor when buying goods or services from another vendor. Important, from another vendor. Okay? So remember, we are a business and we're already a registered VAT vendor. So when we pay, when we are buying goods or services from that registered VAT vendor, now we experience what is called input VAT. The input VAT is included in the cost of goods or services. When we purchase the goods or when we pay for the services, the amount that we pay must include the input VAT already. Now, at times it becomes tricky for us as learners to understand. How do I differentiate between my input VAT as well as my output VAT? I'm going to try and explain it. Please follow me carefully. So, here is us. We are the shop. So, this is us. We are the shop. This is us. For us to be able to sell goods to our customers, we need to have the goods in the first place. And those goods come from our suppliers, our registered VAT vendors as well, a supplier. So this is us, the shop, the retailer, but here is our supplier. This is our supplier. Now, our supplier is going to sell goods to us the moment the goods are coming in. So it becomes easy for you to tell whether it is input VAT by following the goods. So here we'll just say, follow the goods. You follow the goods. When we are buying, what direction are the goods going? When we are buying, which direction are the goods going? Because this is us here. So you can see here, the goods are being delivered and the goods are going in. So input VAT arises when goods are coming in to the business, goods and services. Input VAT arises when goods and services are coming in. In this case, we are buying goods from our supplier and this is us. So goods are being delivered. When goods are coming into the business, then we have input VAT. So if I'm to ask you from the understanding that we have so far, which type of transactions do you think can lead to input VAT? Obviously, number one, you're going to have the purchases of goods. Goods are coming in. Purchase of fixed assets and consumables, as well as expenses that are incurred. All right. So it is easy for you to understand input VAT. What do you do? Follow the goods. Simply follow the direction of the goods. We are the business. What direction are the goods going? As long as the goods are coming in, input VAT will arise. Goods coming in, purchases. Goods coming in, purchases. Input VAT then arises. Now, let's quickly go on to output VAT. Remember, we buy goods from the supplier so we can sell them to our customers. So we buy them from the supplier so we can sell them to our customers. Remember, the shop is us. This is us over here, the registered VAT vendor. So output tax, this is VAT charged by a vendor when it sells goods or when it renders a service. The output tax is included in the price charged for goods or services. Remember, we have the goods now in our business. We need to sell them. The moment we're selling the goods, our customers are bringing money. But in the money that they are bringing, in the price that they are paying for the goods and the services, within that price, we have already included VAT. And that VAT is what we call output VAT. Output VAT. Now, this is our customers. These are our customers, okay? So you can see this is their home. They're taking the goods home. Okay, these are our customers. They've done shopping from our shop and they're taking the goods home. So the moment the goods are leaving the business, they're going out. The goods are going out. The moment they go out, we consider that to be output tax. Output tax. So we follow the goods, never follow the money, rather follow the goods. Once you follow the goods, it makes it easy to ascertain whether it is input or output. Output, the goods are now being sold to the customers. So the goods are going out. Then output tax will arise. All right. So already in your mind, you have an idea of the type of goods or type of services that can fall under output. Number one, sale of goods, sale of fixed assets, services that we are rendering to our customers, as well as bad debts recovered. All right. Now, remember, as I'm explaining, you need to be making notes. You need to be taking notes. You must not watch this recording as if you're watching a movie or something. Once I explain, please make sure you take your notes down. Okay, let's quickly move on now to what we call VAT adjustments, because you'll find that a question is going to come with VAT adjustments. For example, now we were able to ascertain input VAT, purchases, we bought goods. Output VAT, we have sold goods to our customers. But there are certain adjustments which we also need to consider. Now, it is very important that we understand that when we purchase goods, there is output VAT. When we purchase goods, it is input VAT. And that one, we can claim it from SARS. But when we sell goods, then output VAT arises, and that is payable over to SARS. Now, we have now the first one, which is bad debts. Now, you understand what bad debts are. When our debtors are not able to meet their obligations due to several reasons. When we have bad debts, that will lead to a decrease on VAT payable to SARS. Bad debts will lead to a decrease on VAT that is payable to SARS. All right? And then discount allowed as well will lead to a decrease in the VAT payable to SARS. As well as debtors allowances. This will also lead to a decrease in the VAT that is payable over to SARS. I want us to come now to what can increase the VAT payable to SARS. The first one is discount received. Discount received will lead to an increase in the VAT that is payable over to SARS. And then we have creditors allowances. It is important that you know that they lead to an increase in the VAT that is payable over to SARS. And lastly, drawings. Okay? Drawings, because taken for personal use by the owner, it increases VAT that is payable over to SARS. Okay. Now, I want us to come to the calculations. This aspect is very important now. You need to understand that in most cases in your exam, which is soon to come, the examiner wants to test you on your ability to calculate VAT. And you are given different types of amounts. It could be inclusive, exclusive. At times you are given the VAT amount. If you're not aware, you might end up calculating incorrectly. Now, when calculating VAT, it is important to establish this, whether the amount is inclusive or exclusive. So the moment you're able to differentiate between inclusive and exclusive, you are able now to calculate your VAT. As you can see here, whenever we have a selling price that is exclusive means it does not include. So selling price that is exclusive of VAT has to be 100%. Selling price that is exclusive of VAT is 100%. Then our VAT is 15%. Our VAT is 15%. You also have what we call selling price now that is inclusive of VAT, which becomes 115. Already here you can see where it's coming from. If you have a selling price that is exclusive, which does not include, if you come and you include that, you will have selling price that is inclusive. So your 100 plus your 15 gives you a 115. Okay, I'm going to show you now how that can relate when we are calculating. But this is very important, dear learners, that you understand that as long as it is exclusive, it is 100%. And once that comes in, it is your 15%. Therefore, it means your selling price inclusive of that becomes 115. Now, when we are calculating that, there are three options that are given. I want us to exploit these three options that are given. Let's start. Option number one, when given the VAT exclusive, the amount that does not include VAT exclusive amount, all right? Remember, the VAT exclusive amount is always your 100%. Your exclusive is 100%. We saw that in the previous slide. So if you are calculating VAT, you have to now say my VAT, which is what I want. Now, I think most of you are now quite aware of the UK method, which says what I want over what I have multiplied by what I have will give me what I want. So in this case, it will be what I want as a percentage over what I have as a percentage multiplied by what I have in rands will give me what I want in rands. Very important, very important. Let's see how this can come out if we're given figures. It says, calculate the VAT amount. All right, so they want the VAT. So already I know I want, this is what I want, 15, because VAT is 15. So what I want is 15. Calculate the VAT amount. What am I given? VAT exclusive. And I know that my exclusive is 100%. So in terms here, I have two aspects. All right. So what I want is the 15. What I have, remember your have must have two values, the percentage as well as the rand. Your have must have two values here, the percentage as well as the rand. So what I want is my 15%. What I have is the exclusive, and exclusive is 100. And the amount then which I'm given, which I have, is 17,000. All right. And then if you punch that in your calculator, boys and girls, I want you to quickly punch that in your calculator. How much do you get? Please punch it in quickly. You are saying 15 over 100 multiplied by 17,000. Punch that in your calculator. How much do you get? All right. Thank you. You're telling me you're getting 2,550. You're getting 2,550. That becomes your VAT. That becomes your VAT. So what did we do? We simply decided what we want. The moment you know what you want, which is your VAT, it goes on top. And what you have goes at the bottom. And your have must have two values, the percentage as well as the rand amount. And then we ended up with 2,550. Let's see if there's another option in calculating VAT again. When we have an inclusive amount, so this inclusive amount means VAT is already added within this amount. Inclusive, VAT is already been added. Let's see how this will pan out. If what you want is the inclusive, it is important that inclusive becomes, because remember, exclusive, we agreed, it is 100. You remember that other slide. And your VAT is 15. Therefore, your VAT inclusive becomes 115. So you have to now know what you have. Now, in this case, they want us to calculate VAT. So what we want is our VAT, which is 15 over 115. Why 115? Because we are dealing now with an inclusive amount. Inclusive is 115. It already includes VAT. It already includes VAT. VAT is already embedded in the amount we're given. So what I want and what I have, and this is the what I have. Let's see if we do example number 2. All right, remember, what I want is 15, dear guys, and what I have is inclusive, which is 115, multiplied by what I have. Here's what I have, 19,550. 19,550. Guys, please quickly punch that in the calculator. I want you to give me the figure. Punch that in the calculator. How much do you get? Okay, quickly. How much do you get? Thank you. I'm hearing that you're getting 2,550. That becomes our VAT. So it becomes very easy then. So far we've done 2 options. Number 1, when we're given the exclusive 100. Then when you are given the inclusive 115, let's now exploit the third option. Okay, the third option becomes very much easy. All right, in the third option, when you are given 2 amounts, that is the VAT inclusive, which is your 19,550, and you're also given your VAT exclusive. So all you do is to subtract, just get the difference. The difference between your VAT inclusive and your VAT exclusive gives you your VAT. Okay, so calculate the VAT exclusive and VAT inclusive amount. We have done that one. Simply subtract when you are given the inclusive and the exclusive. That will be the easiest way, unless you want to complicate your life and start calculating. But you can just get the difference. The difference will sort things out for you. All right, make sure you have your calculator, your pencil, and somewhere to write, because we are going to do our first activity now. Let's see what it says. Forever traders required. Tom Smith is the sole owner. The information relates to the VAT period ended 31 August, the year 2020. The standard rate of VAT of 15% is applicable. Remember, we are always using our standard rate of 15%. It is applicable to all goods purchased and sold. Okay, let's hear what else do they say. Calculate the VAT amount that is payable to SARS. Okay, so in this particular question, I've seen other questions where they come and say, calculate the VAT payable or receivable. In this question, they're already telling us that VAT is payable. What they want you to do is to calculate the amount that is payable. But they are telling you already that it is payable. All right. So that problem has been solved for us in this particular question. They're telling us that VAT is payable. All they want us to do is to calculate the amount, therefore. Let's see how we can do that. Let's quickly go and do that. Information. Amount due to SARS. Important here. Amount due to SARS on the 1st of August 2020 is 31,470. So once it is due to SARS, it means it is payable to SARS. It is payable to SARS. And if an amount is payable to SARS, it means it is a liability. Okay? Due to SARS, it is payable to SARS. Therefore, the amount due to SARS is therefore a liability. The following transactions appeared in the records for August 2020. Let's see the transactions. Okay, so there's a slight change in the figures here. That is, some were already given, but I just wanted to walk us through on how to calculate some of these figures. So here's the information that is given. Now that we have the information, let us start the calculations. Amount due to SARS. Remember, we have spoken about this. If an amount is due to SARS, it is owing to SARS. That means this is a liability. Okay. Now, what we are going to do is we're going to open a VAT control account. In my calculations, I'm going to be showing a VAT control account. The VAT control account is simply a summary of your input VAT account and your output VAT account. So it becomes much easier in grade 12 when we're calculating our VAT payable or receivable from SARS, just to use a VAT control account. So I'm going to use a VAT control account in this lesson, all right? Whereby your debit side, you're going to have your input VAT, and your credit side, you're going to have your output VAT. So the moment an amount is due to SARS, I'll consider it to be a liability owing due to SARS. So I'm going to consider it to be a liability. And I know my liabilities have a credit balance. That means I'm going to come now to my VAT control account, and I'm now going to come to the credit side because I'm owing SARS. So I'm going to come to the credit side. Amount due to SARS. Due to SARS. I'm owing SARS. So I'll put it on the credit side. Here is my 31,470. 31,470 on the credit side of my VAT control account. Let me quickly go now to my next transaction. Okay. It says total sales. Total sales. So the first thing you need to know is it input or output? Total sales. Am I dealing with input or output? So think again. What direction are the goods going? Are they coming in or the goods are going out? For you to be able to tell input or output. Remember, we are selling. We are selling. You got the clue. So once we are selling, the goods are going out. So already I know my sales. I have to consider output VAT here. Okay, output. But now I need to get my VAT. My VAT. What am I given? I have the exclusive and the inclusive. And I showed you earlier on, there's a quicker way of doing this. Just get the difference. Okay, grab your calculator. We are now going to say 615,250. Then I subtract 535,000. I just get the difference here. Please punch it in your calculators. How much do you get? When you say 615,250 minus 535,000. Thank you so much. I'm told it is 80,250. All right. So that becomes my output VAT, 80,250. That means I'm going to put it on what side of my VAT control account? Remember, I must have a VAT control account. On my VAT control account, I have a debit side, I have a credit side. Which side is your output? Here is my output. So it means I must have my 80,250 on the credit side. Let's do it neatly and see how it will come out. There it is. I have my sales here, all right? And I have my 80,250 on my output. On my output. Goods going out. It has to be that simple, all right? It is indeed that simple. Now, boys and girls, let us quickly go on to my next aspect. Purchase of stock. I'm going to give you half a second. I want you to determine now. Is it input or output? First, is it input or output? Purchase of stock. Purchase. You can see my gestures already. Goods are coming in. Yes, goods are coming in. So purchase of stock, here we're talking input VAT. This is input VAT. Goods are coming in. All right. So we have that problem solved already. That when it's purchase of stock, we're talking about input VAT. Our next problem then becomes how much is the VAT? But that should not be a big issue. All right. Remember what you want or what you have times what you have. What is it that we want in this case? We want VAT. So VAT, what percentage is it? It's 15. So what I want here is my 15. What do I have? All right. Remember, my exclusive 100%. VAT 15. Therefore, if I add this two, it gives me my inclusive 115. So remember, you must have two. 1, 2. The rent and the percentage. So I'm now going to say what I want is 15. What do I have? I have 115. And my have must have a rand, and which is 442,750. Please write this together with me, and I want you to punch it in now in your calculator. 442,750. How much then do we get? We then get, please punch it in. How much do you get? Yes, you get 57,000. You get 57,750. Thank you so much. You get 57,750. This already is easy because you already know it is input, and now you got the VAT amount. So let's see when it's neatly written, how should it appear in our VAT control account? There it goes. In my VAT control account, remember, it is to come to the input. Why input? These are purchases. Purchases, goods are coming in. Follow the goods. Never follow the money. Follow the goods. What did I say? Follow the goods. So we're going to come to our purchases, and then it's 57,750. Simple as that. Now, guys, let's quickly go on now to my next aspect. It reads, discount received from suppliers. Discount received from suppliers. And this is 11,500. Discount received from suppliers. Now, here is what I want us to understand. How does discount come about? Discount received from suppliers. I want to take you through this journey. The first thing that happens is we purchase goods. What is purchases? Input. All right? So I want you to follow this now. I want you to follow this. Whenever we have discount, I want you to follow the pack. It begins with your purchases. It begins with your purchases. And purchases are what? Input VAT. All right? Purchases is input VAT. And input VAT is receivable. Okay? Input VAT, it is receivable. Now, the moment you get discount, it means you are coming to reduce your input VAT. I want you to follow that. The moment you get discount, it is coming to reduce your input VAT. So the way you can reduce your input VAT is by having output. I'll say it again. Discount only arises after a purchase. And purchases are input. Input is receivable from SARS. And then you are now having a receivable from SARS. Then you then get discount. Discount now simply means you are decreasing your receivable. And the only way of decreasing your receivable is when your payable increases. So your output increases. Output, remember, it is payable here. This is payable. So what does that mean? First, let me calculate my VAT. What it means is I have to take my discount now to my output. This is the point that I wanted you to understand, that my discount has to come to the output. Now, let me calculate the VAT. What I want is 15. This is what I want. Okay? VAT, 15. All right? Don't forget that. What I want is 15. What is it that I have? I have exclusive. And my exclusive, we have come to an understanding. My exclusive is always 100. So I want 15. What I have is 100. And what I have has to have two values, the percentage as well as the rand. Let's give it the rand, which is 11,500. Now, my dear learners, please punch that in the calculator and tell me how much do you get. All right? Thank you so much. 1,725. 1,725. So I have 1,725, which has to go to my output. It has to go to my output VAT. Okay? Let's see. There it is. Output VAT. Output VAT. Discount received, 1,725. Simple as that. Remember, discount only arises after we have purchased. Purchases, input VAT. Input VAT, receivable. So if there is discount, we now need to decrease that receivable, and it will decrease when it goes to the output. All right? Now, Let us go now to the next aspect, which is goods returned by debtors. Goods returned by debtors. Goods returned by debtors. All right. Now, maybe the first thing we need to ascertain now is, what direction are the goods going? Okay. Goods returned by debtors. I'm going to give you a second to tell me which direction are the goods going. Okay. I want you to say, Mr. Simbi, I think these goods are going in or out. Okay. Quickly. Goods returned by debtors. We are the business. We sold goods to a debtor. Goods went out. Output. Now, that debtor is now returning goods back to us. When he's returning goods back to us, the goods are coming in. So returns definitely has to be input. All right. So returns will be my input. I just followed the goods in this case. Follow the goods. We sold, goods went out, output. The goods are coming back in, it becomes input VAT. And then now the examiner made it easier for us because they gave us the exclusive and the inclusive. So we can simply get the difference. Let's do that. I'm just going to say now, my inclusive is 25,875, and I'm going to subtract 22,500. How much becomes my VAT? Please punch it in the calculator once you get it. Give it to me. Thank you so much. It is 3,375. 3,375. That becomes my VAT. 3,375. Input or output, we have already determined that when goods are being returned to us, okay? When goods are being returned, debtors allowances, we are talking input. Let's see. There it is. Input. All right. And my debtors allowances, 3,375. 3,375. Okay. I now know you now have an understanding of how this whole thing works out. Let's see if we do another one. Okay. Stock taken by owner at cost. Now, this one is easy because they have given a stock taken by owner at cost. I want you to be aware of this, that whenever the owner takes goods, it has to be at cost. All right. And then now the VAT exclusive amount is 9,600. Remember, exclusive 100%. Exclusive is always 100%. Exclusive is always 100%. And then my VAT is 15%. That is what I want. Okay. So when stock is taken by the owner, remember we spoke about drawings earlier on. What does it do? It increases your VAT payable to SARS. So that means it is your output. It is your output. When stock is taken by owner, it is your output. Now, let us calculate this VAT now. What do we want? We want 15. What do we have? Give you a second. What do we have? You can see that. Yes, thank you. We have 100 here. What else do we have? Remember now the rand value. Can you see it? Thank you. It is the 9,600. That is what we have here. Now, let us now calculate this. Please punch it in your calculator. Thank you. Thank you so much. We have 1,440. All right. Thank you so much. It's 1,440. This is the VAT. We've already established that this is output. Okay, let's see now. There it is. My drawings. Stock taken by owner, and then 1,440. It is on my output. Okay, now let's see. I think we have one more to go. Debtors accounts written off. Debtors accounts written off. What do we call this? These are bad debts, isn't it? Okay, debtors accounts written off. And we have VAT inclusive. Now, the question then becomes, is it input or output? Is it input or output? I would like for us to trace it, get the relationship between the bad debts and the movement of goods, so then you can get to know, is it input or output? I'm going to take you through a quick journey. How does debtors come about, and then we write them off. How does it come about? First, it has to come from a sale transaction. So first is sales. All right. So I'm going to do as we did earlier on. So the first thing is there is sales, and sales means output. And we have an understanding that once it's output, it is what? Payable to SARS. Now, when we have debtors accounts that are being written off, that means now we are having bad debts. We're having bad debts. Now, bad debts simply means that amount cannot be recovered anymore. That means whatever we are supposed to pay over to SARS now has to decrease. Our payable to SARS should then decrease. Therefore, if we are to decrease what is to be paid over to SARS, it should now come to the input. So that means my bad debts now comes to my input. So once we have that aspect sorted, here I'm dealing with input. Once we have that aspect sorted, now we can calculate the VAT. What do I want? I want 15. What do I have? Inclusive 115. I have 115. And remember, the second amount, it's your 36,800. So if you 15 over 115 multiplied by 36.8, it should give you your 4,800 trends. 4,800 trends. Input or output, we've already determined that one. It should go to my input. Let's see it when it is neatly shown. There it is. On my input, I have my bad debts, 4,800. Now, I want you to have your calculator close to you. I want you to have your calculator close to you. We're about to add some figures. All right. So this is my VAT control account now. I have my input as well as my output. I now want to ascertain whether it is what the balance is, because in this question, they're already telling us that it should be payable, but we want to know how much is the payable amount. Okay. So I want you now to add your debit and your credit side. Let's start with the input side. Let's start with the input side. Okay. I want you to tell me how much you're getting on the input side. Okay. When I'm saying on the input side, I'm getting 65,925. This is what I'm getting here. Okay. And then on the output side, how much are you getting? Okay, so you're adding 31,470, you're adding 8,250, you're adding 1,725, you're adding as well 1,440. When you add that, how much do you get? Thank you. Someone is telling me I'm getting 114,885. Thank you so much. Now, you then check which side is bigger. We're closing off a ledger account. So my output side is bigger, or if you want to call it the credit side, it's still okay. So that means I'm not going to have the 114,885 here. I'm going to come here 114,885 because it is the bigger side. All right. That means now I'm now going to have my balance carry down here. I'm going to have my balance carry down here. How do I get balance carry down? I simply come and say my 114,885 subtract 65,925. I get the difference between the two. Please punch that in your calculators. How much do you get? 114,885 subtract 69,925. If you punch in the calculator, I want you to give me the difference. Thank you. Someone is saying it's 48,960. So I come here and then the balance brought down becomes 48,960. That becomes the final answer. 48,960. They've already told us that it is due to SARS. So they wanted the amount, 48,960. Let's see how this would appear if it is neatly written. There it is. 48,960. 48,960 there. Okay? There it is. 48,960. Now, it is important, dear learners, that you understand how to do this question because you can quickly get some beautiful marks out of your VAT questions. Get some beautiful marks out of the VAT questions. Now, I want us now to remember it's on the credit side. So already they told us that it is payable. Okay. Once it's on the credit side, you'd know that it is payable. I want now to make you understand that a debit balance will indicate that VAT refund is due by SARS. If the balance was debit, it means SARS owes us. If the balance was debit, in other words, if the balance BD was here. But in this question, the balance BD was on the credit side. That means it is an amount that is due to SARS, due to SARS. Okay, remember, we are talking about a liability. Now, dear learners, I want you to understand this. This is what I was doing. I was able to determine if VAT is payable or receivable from SARS. The quickest way to know if it is payable to SARS is simply to take your output tax, subtract your input tax, and if the output is greater than the input, then it is payable to SARS. Okay, then quickly, if you want to know if VAT is receivable from SARS, you again take your output tax, subtract your input tax, and if the input is greater than your output, then you should know it is receivable from SARS. This is very important, very, very important. If your input is greater than output, it is receivable. I want us to quickly have a summary of a VAT control account. This is our VAT control account. Remember what we did on the debit side and as well as on the credit side. We're going to do this question. Let's go. The question reads, Long Hill Traders. Long Hill Traders. The information relates to Long Hill Traders for the VAT period ended 30 April 2021. The VAT rate of 15%, applies to all goods and services. We've had this in the previous question. They're repeating it again. Okay. Required. Calculate the amount receivable from, so here they want us to ascertain whether it is receivable or payable to SARS. So in this particular question, we should be able to determine whether it is receivable or it is payable to SARS and indicate whether the amount is receivable or payable. So we have to show, we have to indicate whether it is receivable or payable. Let's quickly look at the information. They're giving us amount owed to SARS, owed to SARS, owed to SARS. That means it is a credit balance here, a liability. Owed to SARS, okay? If it was by, then it would mean that they are going to, they will be owing us, therefore it becomes a debit. But in this case, it is owed to SARS, so it is credit. Then VAT transactions, here we go. Here's the information. Okay, so returns, drawings, debtors accounts, total purchases, and total sales. So it's more or less the same as what we did in the previous question, but let's see how this will pan out. Let's quickly go. Amount due to SARS on the 1st of April, 15,890. How do you show this now? Remember, we have agreed now, we're going to show most of our calculation. We're in the VAT control account. We're going to use a VAT control account. It will make it easy for us to ascertain whether the amount is receivable or payable. VAT control account. All right, let's see now, how do we show the amount owed to SARS? Remember, we have agreed that it should be a credit balance. Therefore, if we are going to show it in a VAT control account, it will be 15,890. So it's just a 9 here, 15,890. On the credit side, that is the balance, 15,890. Okay, let's quickly go on now to the first transaction, and it reads, returns by debtors. Okay, already you know now, you know what direction are the goods going. Do you know the direction that the goods are going? Are they coming in or they are going out? These are returns by debtors, returns by debtors. Okay, so the goods are coming in. So already here we have ascertained this is going to be my input. This is going to be my input VAT. All right. Goods returned by debtors. Goods are coming in. Now, I now need to calculate my VAT. Excluding VAT, remember, 100%. VAT, 15%. Including VAT, 115%. Now, I want you to tell me, what do I do if I'm to calculate? Remember, the UK method, whatever you want, you put it on top, what you have at the bottom, but your have must have two values, the percentage as well as the rand. So what I want is my 15. Here I have my 15. What do I have? I have, remember, two values. These are my two values. I have 100. And my have is also 9,800 rands. And then please quickly punch that in the calculator. I can see some of you guys are already doing that. Thank you. Someone is telling me you got 1,470. Someone is telling me, Mr. Simbi, I got 1,470. Can someone confirm that for me, please? Thank you. 1,470. Now, we already know this goes to the input. This goes to the input. Let's quickly take it to the input. There you go. On my input, and then 1,470. What is it? Our debtors' allowances. Okay, let's quickly do the next one. Let's see how this one is going to come out. Drawings by the owner. Remember, we did this one again. Okay, so it tells you if you work through enough past papers, you should be able to answer some of these questions that the examiner might demand you to answer. Drawings by the owner. All right, remember drawings, output. Thank you. Someone has already given me the answer that my drawings go to my output. All right. And then, oh, this one is easy. Why? Because they gave us the VAT. What should we calculate? Nothing. Why? Because the VAT amount has been given already. So I don't calculate anything. Drawings by the owner. Okay. So let's quickly go and see how this should appear. Okay. This is how it should appear. Drawings, output. Here's my output. And my drawings is 3,075. Okay. All right. Let's quickly go now to my next transaction again. Debtors accounts written off. Does this ring a bell? Yes, it does. This is your bad debts. Remember, we spoke about it just a few minutes ago. And we agreed that once you have bad debts, where do we record it? Is it input or output? Bad debts in one. Okay, thank you. Bad debts comes to your input. Bad debts is your input. Bad debts is your input. All right. And then how do I calculate this amount now? This should be easy. I'm going to give you a second to calculate it before I can do it with you. I want you to calculate it on your own. Remember, what are you given? You are given the inclusive and the exclusive. And what you want is your VAT amount here. This is what you want. I'm going to give you a second. Just look at it carefully. What do you think you must do there? What do you think you must do? Okay. Anyone to give me the answer? Thank you. In this case, what you should do, as I'm being told, you should now say my including VAT, which is 10,005. I subtract my excluding VAT, which is 8,700. Can someone please give me the figure? If you do that difference, anyone please? If we say 10,005, subtract 8,700. If we do these figures, how much do we get? I want anyone to give me the figure, please. Thank you so much. Someone is saying you get 1,305. 1,305. So where do I record this now? If I am to show this, it means I will need my VAT control. In my VAT control, remember, input. All right. So I would come here and I would say, here's my bad debts, and I would have 1,305 over here. Okay. This is where my 1,305 would appear on the input. We have already explained why bad debts should be on the input. Okay. Now, let's see how it would appear. Beautifully written. There is my input and bad debts 1,305. Okay. I want us now to go on to my next aspect. And my next aspect, remember now, if you are calculating in this particular question, our focus is on VAT. That is where our focus is on, the VAT amount. Let's go on to the next one. And the next one is now saying total purchases. I'm going to give you a minute, okay, less than a minute. I want you to calculate this one for me. I want you to tell me, first, tell me, is it input or output? Okay, and one, total purchases. Purchases. What direction are the goods going? Are they coming in or are they going out? That will tell us whether it is input or output. Okay, someone is telling me the goods are coming in, Mr. Simbi. Purchases, goods are coming in. Once it is coming in, it becomes input VAT. So here I'm going to have my input VAT. I'm going to have my input VAT there. Okay, goods coming in, therefore input VAT. Purchases, input. Now, I want you now to calculate the VAT amount. Remember, we're calculating the VAT amount there. Remember what you want and what you have. All right. I think some of you have the answer already. Let's do it together then. Someone tell me, what is it that we want? We want 15. We want 15. What do we have? Excluding. Excluding is 100%. Okay. What we want is 15. And what we have is 100. Am I together with you? And then remember, want, have, and your have must also have the rent amount. 224,000. Thank you. How much does it then total to? How much will it then total to? Punch that in your calculator, please. Someone give me the figure. If you say 15 over 100 multiplied by 224,000. If you punch that in the calculator, can someone tell me how much do we get? Okay, someone's telling me we get 33,600. Okay, thank you so much. Can someone confirm if this figure is correct? Okay, thank you. So 33,600. 33,600. So if I am to show this in my VAT control, if I'm to show this in my VAT control, where would it go? Remember, purchases, input. So it will come to my input. So I'd come here and I'm having my purchases and the amount is 33,600. 33.6. Okay, let's now see if it is neatly written. Oh, thank you. There it is. Input and then purchases 33,600. Okay, now you can see this is easy. I think now we're left with one little transaction. This one, I want you to do it again and tell me how do you get the amount. This one says total sales. Total sales. Okay, learners, tell me input or output. Remember, we follow the goods. Sales. Sales. All right, sales. Someone tell me, is it input or output? Someone is telling me, Mr. Zimbi, it is output. Thank you so much. So sales is output. Sales is output. Goods are going out. Sales is output. So that problem has been solved now. Our next problem is to calculate the VAT. But now I'm glad because the learners that I'm having here know what they want. What is it you want? You always want 15. You always want 15. What is that you have? Inclusive. Inclusive is what? 115. Inclusive is 115. So what you want is 15. What you have is 115. Then you multiply that by 396,750. Okay? Now, punch that in your calculators, please. Punch that quickly. Okay, I can see some of you are doing it. How much do you get? All right. Someone's telling me, Mr. Simbi, it's 51,750. 51,750. All right, thank you. Anyone to confirm that figure for me, please? Yes, 15 over 115 multiplied by 396,750 is 51,750. We already know it is going to my output. So if I'm to quickly draw a small little VAT control account here, where would I put it? It goes to my input or output, input or output. Thank you. Someone is saying we have already established goes to the output. So I will have my cells here and I have my 51,750, and then you are sorted. Okay, let's see how it looks when it's neatly written. There it is. There is my cells on my output, and it's 51,750. Cells on my output, 51,750. Now, dear learners, let's see if we can close this out again. Remember what I taught you earlier on. You need to add both your sides. You add your debit, you add your credit as well. Let's start with the debit. How much do you get when you add the debit? Please punch it in. You are saying 1,470 plus 33.6 plus 1,305. Can someone tell me how much do we get? All right. Someone is saying, Mr. Simbi, we get 36,375. 36,375. Someone confirm that? Thank you. Thank you. And then let's add our credit side. We are adding 15,890. Punch that in your calculator, please. 15,890 plus 51,750 plus 3,075. So if we add these three, how much do you get? I'm waiting for the answer. Thank you. Someone is saying 70,715. 70,715. All right. And then we close off the ledger account with the side with the highest amount. So I'm going to come here. I'm going to have my 70,715 here. Okay. So I'm going to come here. I'm going to have again 70,715. Okay. That means I'm now going to come here and I'm going to have my balance carry down because the debit side is less. It has 36. So how do I get that? I'm now saying 70,715 minus 36,375. And then that gives me my balance carry down. How much do you get, dear learners? Okay. Someone is saying we get 34,340, which therefore comes down here as my balance brought down 34,340. Wow. Thank you so much. All right. Does that make sense? Yes. All right. Now, let's quickly see how it would appear if it is beautifully written. There it is. You have added your credit side. You get this one. And then you put it again on the debit side. Then you get the difference with those three. Then you end up with 34,340, which comes down here. Balance brought down 34,340. All right. Now, learners, I want you to understand it is very easy to get all the marks here on VAT questions. Practice, practice, and more practice. Don't wait to practice on the day before you go and write your prelim or your final. It should be within your fingertips. Practice should just be a culture. You should already have developed a culture of working hard by now, so that when the prelim is just knocking on the door, you already know how to do your VAT questions. This should be free marks for you when you get into the exam. Now, I want to talk now about whether it is payable or receivable. Once it is on the credit side, it becomes payable to SARS. A credit balance means payable to SARS. Internal control relating to VAT. It is inevitable that some unscrupulous business people may try to do some wrong things that relate to VAT. But as a business, we should have internal controls that relate to VAT. Let's look at some of those ones. Number one, invoices that are received from suppliers must be checked to see whether the amounts there are standard rated, zero rated, or exempt items. And they should be charged accordingly. In other words, if items are standard rated, they should not be recorded as zero rated or exempt items, and vice versa. Now, a vendor must complete the VAT 201 form accurately and submit to SARS on time. So this is one of the things that are very important: submission to SARS on time. Then VAT must be correctly recorded in the books of the business. There mustn't be amounts that are being overstated or understated to benefit the business, but VAT should be correctly recorded in the books of the business. Now, vendors must only issue valid tax invoices. They mustn't make up tax invoices that are invalid. Now, we must also ensure that payments are done correctly. It is also important that the internal auditor or the owner should conduct a random VAT input and output calculations. All right, that should be done to ascertain if things are going on as they should. And we should also ensure that VAT is paid on the due date to avoid penalties that can be imposed by SARS on late returns. Okay, I think you already know that once the returns are late, penalties will be charged. So a business should ensure that submissions are done on time to avoid penalties. Now, dear learners, it is very important that when we are dealing with value-added tax, we should practice good ethics, as this would benefit the development in terms of tax collection. Now, the above procedures should be in place to prevent fraud and VAT evasion. Now, the next question is, you're asking, Mr. Simbi, what is this VAT evasion? Now, I'm going to talk about VAT evasion and avoidance. VAT evasion as well as avoidance. First, let's define tax avoidance. Tax avoidance. If you have someone to write, please, it is important that you take down this definition. I'm going to read it nicely and slowly so that you can benefit from it. It is generally the legal way of attempting to reduce the amount of tax that is payable by means that are within the law. Means that are within the law. Legal. That is tax avoidance. For example, if you reduce your purchases, that will reduce the VAT as possible. Okay? And then we also have what we call tax evasion. Tax evasion. Tax evasion now, it is illegal. All right? Remember, avoidance, legal. Evasion, illegal. So tax evasion, it is the illegal steps to avoid paying tax, illegal steps to avoid paying tax, such as not declaring some amounts over to SARS, or you forcibly reduce the income so that you can inflate your expenses. Now, if you inflate your expenses, it will lead to having fictitious transactions. So we've spoken about evasion, which is the illegal steps to avoid paying tax. And some of the people do it by forcibly reducing the income, or they inflate their expenditures. And then they can also create fictitious transactions. That is the main difference between our tax avoidance and tax evasion. Now, it is important, learners, that we understand these ethics. Now, when you talk about VAT ethics, it is the willingness of the business and the individuals to pay their taxes and comply within tax laws. Now, some illegal or unethical practices that can relate to VAT are the following. What is it that can go wrong in terms of ethics in VAT? Number one, a vendor can collect VAT from the customers, but then not pay it over to SARS. If you remember what I said when I began this presentation, that when we are selling goods, we are collecting VAT on behalf, important word, on behalf of SARS. So we cannot therefore say the money we have collected on behalf of SARS, let us use it to pay our business expenses. It is illegal. That money should be paid over to SARS. So a vendor can collect money from customers but not pay it over to SARS. That is illegal and unethical. A vendor can claim VAT refund but not registered as a VAT vendor. Then this also is illegal and unethical. A vendor can claim VAT refund from fictitious invoices. That is, they can create fictitious transactions that did not take place. And if they then claim VAT from such transactions, we then consider that unethical and illegal. Then lastly, a vendor does not record cash sales on a VAT invoice and does not charge VAT. Now, you'll find that some of the people do these illegal transactions where cash is only received, and some of them would refuse to have transactions through the bank. Now, these are illegal and unethical, as a VAT vendor should always record all the VAT, whether it is cash or via any other means of payment. Now, it is important to note, dear learners, that VAT fraud and VAT evasion are serious offenses and they should be reported over to the South African Revenue Services. And the VAT vendor can be fined or can face a prison sentence. That is on the VAT ethics. Now, dear learners, I want to thank you for joining me today. Please take care and continue practicing. Goodbye.